First of all, nice to meet you. My name is Guy. It's short for Guillaume. It's a French name. I'm a part of Angels Partners. We're basically a fundraising platform, and my background was actually more in the startup scene in London and Paris. And then I was part of like the co-living scene. So I don't know if you guys are a bit in real estate, but co-living is like shared living. I was organizing like shared housing and then build a consultancy around that and several books. And now my main occupancy is helping founders and entrepreneurs like being matched with the right investors and finding the right investors. Um, so Today, what I wanted to share is kind of like our best practices in terms of finding the investors and getting noticed, especially in a world where outreach is being done very easily, and especially with AI. I'm kind of gonna walk through our process and also kind of the best practices that I've been seeing of founders that successfully were able to fundraise. Number one and that's one thing is before going to fundraising is always asking yourself like, why do you fundraise, and having that very clear. When talking to investors, one thing that I'm seeing a lot is that instead of pitching your product, which a lot of people do, you shouldn't pitch your product, but you should actually have an investor proposition. So why the rounds that you're having right now is actually a good deal for the investor. And if you take it this way instead of the other way around, um, because investors, most of the time, they actually don't care so much about your product. What they care mainly is about the market, the traction, and why you are the person that's going to create the value in the business for them. So before 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 going into kind of best practices, there are different types of investors, right? We have mainly angel investors on one side, usually private individuals putting anything from 5 to 100K. Of course, can be more, but then we have venture capital, which at least 250K, but usually goes up to like 5, 10 million. And we have family offices, which are a bit more flexible and really can be better fit, especially for more like sustainability and impact startups. And what I want to show you is just a few trends, because a lot of people are saying that right now it's really hard to fundraise, that the market is very volatile. So one thing is that we are actually right now in terms of, and these are the latest stats, we are above pre-COVID levels when it comes to the overall amount invested by VCs. And so the issue is not so much that the market is stagnant. The issue, um, and here, same thing, you can see global venture dollar volume going through Q4. This is from Crunchbase. So it's actually looking pretty good. There's no down right now whatsoever. The issue is mainly that two things. Number one, a lot of capital is being deployed to late stage companies. So that's what we're seeing, especially in the US, but here in Europe as well. Capital is going towards companies that are not as risky as pre-seed and seed stage companies, because right now and I'll share a bit why afterwards, but a lot of investors cannot take on that risk, and needs to invest into de-riskified assets. And that leads to a lot of the capital that before was a bit more balanced being taken away by later stage companies. The other issue, so in Europe, it's not as dramatic as in the US, but you can see that the trend towards later stage is growing a bit too. The other issue is that even though we have more capital actually right now going to like early stage investments, I assume some of you in the group might be like in the early stage phase. Yeah. Um, the amount of deals is actually stagnant. And when we look at angel investments specifically, the amount of deals for seed stage is actually going down. So that means that we have more or less the same amount of capital being allocated, but to fewer deals. And the fewer deals is because we have three domains right now that are taking off or that are grabbing all of investors' attention. One is anything that has to do with AI. The other one is anything that has to do with biotech and health tech, big sector growing right now. And the third one is anything that has to do with data centers. And and so that's eating away in investment that could have been going to other industries that before were a bit hotter. For example, consumer, for example, hardware, for example, mobile apps. Not saying that it's impossible, just saying that this is how the market is currently trending. So this is a very similar example here. And one thing that I wanted to show you too, and that I got actually I learned yesterday, is there is an issue right now with venture capital. So remember, we have like two main types of investors. We have like angel investors and we have VCs. Um, when it comes to VCs, there has been a significant drop in fundraising activities, as you can see, meaning that venture capital firms stopped fundraising. And the reason why they stopped fundraising is because the amount of exits that we've been having, especially over the last years, has been going down drastically, which means that a lot of the cash that VCs had invested over the last decade is sitting in companies and they can't cash it out, meaning they can't pay back their investors, and it's this, hence it is almost impossible for them to fundraise because they're not able to pay back their investors. So VCs are having a tough time right now. When you talk to them, most probably they will, they'll keep the poker face and saying that everything is going well. But we're seeing for the first time, I saw yesterday for the first time in history, that not in history, but in the last like 20 years, that like we see that the cash on hand, the dry powder is going back down, meaning they have to like eat their own cash reserves to pay back their investors. There and so my guess is that you're going to have a way easier time right now to fundraise from angel investors than venture capital in this context. Um, one more thing that you should know also is that actually the majority, like 80% of tech companies that had an exit or M&A were not institutionally backed. So you don't need to get VC capital in order to have a successful exit. And that is actually a good sign or a good hope. And from our experience too, it is often easier to deal with angels than to deal with VCs. But that's kind of a parenthesis. Kind of wanted to open up the floor right now because just finished like all of the stats. What was that insightful? Any thoughts you guys are having? Yeah, James.
I'll ask one. Just, I wonder what you think, bearing in mind the situation for the VCs, that that looks to me like that's going to be quite a long, drawn out period of them trying to sort of steady that ship. What's your thoughts on that? I mean, to go from where they were in 2021 to have businesses not being able to exit now, that would suggest to me that's going to take a good few years for that to right. And I wonder what sort of impact that you think that might have on businesses that are trying to go from that seed level to those A and B rounds, which might be more reliant on VC capital. Because if the money's not there, the money's not there. Just interested in your thoughts.
Yeah, it's a good question. I don't have the answer. On one side, there are quite a few companies, I think around like 150, that are ready to file for IPO this year. We're talking about companies, especially in the fintech space. I think Revolut is one of them. Like that, there's quite a few companies that are going to file for IPO. So um, it's going to, redeploy capital. But how much that is going to be on that scale, I do not know. And you're right that it is hindering, um, especially companies that are in this critical phase of Series A when it's about scale, because the VC allocation still remains either very early, like early stage to grow or late stage. And I guess that I'm seeing like we're the angel partners. We run fundraising campaigns, and I'm seeing that people at the Series H stage have a hard time to fundraise right now. Yeah, Nick.
Yeah, hi. Just a quick question. You
Hey.
said it was much easier to raise through angels than institutional investments at this point in time. We've completed a pre-seed, which was angels, and we're looking at a seed round later this year. And we sort of assumed we would go the institutional route. But do you see many companies actually going through angels or crowdfunding as an alternative rather than looking for venture capital?
I'm seeing companies doing crowdfunding or crowd equity with oh, I don't know why it stopped sharing with crowdfunding or crowd equity while at the same time also doing their fundraising, but it's usually also with angels. I wouldn't say that crowdfunding or crowd equity substitute VC investments, usually because also of the size. So I don't know,
Mhm.
for example, a seed stage, what you would be raising, but let's say
Probably
that you
two million, something like that.
yeah,
Yeah.
a lot of the fund. I mean, you have like some fundraising of fund crowd equities that are above like 1 million, but the majority are also a bit below, like people raising like 500K. Like, so I'm seeing that more as a substitute for angels than for VCs, especially when it comes to, for example, like say Series A. Once you're going to raise like 5 to 10 million, that in crowd equity is going to be almost impossible. Not impossible, but it's not the norm.
Mm.
Um, yeah, but
Yeah.
it could,
We,
yeah,
we wanted to go ventures really because of the doors that will open as well. I mean, angels are great. We love angels, but they tend to be, they tend to be senior management, smaller businesses, that type of thing. Whereas, a proper sort of VC seems to have such a great network and get us in rooms that we couldn't get in otherwise. So I think that was the other half we really wanted to go with venture capital.
yeah, and when it comes to VCs, like it is still a couple of things I want to share. Um, when you're ready to pitch to VCs, actually, my suggestion would be that first tackle the VCs that are make a list of like let's say 20 or 30 VCs. Tackle the VCs that are the most known. The reason why is because um, because they're the most known, they actually attract the most amount of investors, meaning also like not the most litigious investors out there. So the quality of investment is not as high. So uh, start pitching to them, learn from the pitch that goes with them, and then tackle actually smaller funds because in the last years we've seen a rise of like really small dedicated funds run by like two, three people that can really deploy good capital at like decent scale. So my suggestion would be like, yeah, make that list and start with like bigger funds just to test, and then reach out to these smaller funds that are usually pretty hard to find. You really got to go through LinkedIn or, for example, like we have like a list of 30,000 funds on our platform, Angels Partners, and find some that are really highly relevant for you.
Thank you.
Let's go with Dan. I think you were. I think, by the way, Dan, I think I know your company.
Yeah,
Could
I
be
was
wrong.
just going to say, yeah, nice to meet you. And your name was obviously French. I live in Paris, and my wife is French actually, so I have the French connection as well. And but yeah, I'm sure we've crossed paths before. If not, my co-founder and partner Wesley Baker potentially has. But either way, I've got to jump off in 12 minutes. So I just wanted to say, just before it ends, I think this chat's been very good, and we definitely need to have a chat offline because there's some stuff I'd like to discuss with you in a bit more detail. So if I don't get the opportunity to say this again, I'll add you on LinkedIn or something. We can have a chat offline. But it's really
I
interesting what
can
you
make
just
an
said.
intro then.
Oh,
Then I
perfect.
can make
Yeah.
an intro.
If you could, that'd be fantastic. Thanks, Ollie. Yeah,
Yeah.
like I said, I think it's really interesting, like you said, about the VCs versus the Angels dynamics at the moment and the way the marketplace is adding. And that's great advice. So obviously to focus a bit more on the Angels at this current climate. So yeah,
Yeah.
that's what I wanted to say.
Thank you.
So
Thanks,
yeah, we'll
Dan.
connect and I'll speak to you offline later then.
Sounds good. Yeah, Patrick.
Bonjour, Guy. Nice
Bonjour.
to nice to meet you. I'm half French, so I thought I'd start a little bit in front. Um, Two questions. First, we've been hearing about dry powder for a
Yeah.
lot. Like I've just Googled how much is sitting in VC's bank accounts is 300 billion or more in cash. So this has been, they're not actually activating the cash. So it'd be nice to know a little bit about that. And second is clearly angels, they're getting pretty good returns in saving accounts, etc. So how is that impacting their risk profile in terms of making equity, private equity investments?
Okay. Good stuff. So regarding dry powder, let me show you something. It's actually the only slides that I didn't put in because I'm not so much an expert on the dry powder conversation, but I have some interesting stats. Um, so the one thing I know is this. As you can see, check. So this is so when I said last time or earlier that this is the first time in history, but not in history, but like basically since I don't know when, at least for the last 2 decades, that like the amount of dry powder has decreased. That was the chart I was referring to. And um, yeah, but regarding your second question, I'm not exactly sure. I'll be frank. I don't have an answer to your question. I don't know how this is affecting like angel investment behavior.
Yeah, because a lot of angels I've spoken to, they're like, we're getting 10% through our, various portfolio investments. It's like, why take the risk? So yeah, hopefully the bank's going to start paying less interest. Thank you,
Yeah,
Keith.
you're welcome. All right, so let's see. Couple of things I wanted to share now is all right, how do we get in touch with angels and VCs, just like some best practices. Um, I so I'm gonna try to make this in 9 minutes. Um, there are this is the pyramid, right? There are three ways to get in touch. Either you contact people you know, people that you're connected to indirectly, or you do cold outreach. And you should try from that angle. One of the first things that I usually recommend is that actually you can start with people that are in your direct network. A lot of founders, for example, do not post on LinkedIn that they're fundraising. A lot of founders also do not communicate to their customers that they're fundraising. And sometimes, like some of the best investors can be your current customers if you have some. So that's one thing that a lot of founders are missing out on. The second thing is that there are a lot of people that you're connected to indirectly. So if you, let's say, make a list of your top 30 investors that you want to contact and you find them on LinkedIn, there's a high chance that a lot of them will be a second degree connection. And so that means that you have people in your network that you can contact and ask them for a warm intro to that person. A lot of people try to like reach out to them directly. My recommendation would be try to find the people that can introduce you to these people. Um, on like I want to show you something, and that might be helpful as well. So let me go to the dashboard. What we build at Angels Partners is we have this database. You can use this one for free, by the way. We have 116,000 investors in there, and we allow you basically to filter down, let's say, by most relevant investors. For example, investors in the UK that do SaaS investments and maybe mobile app at early stage, and we're looking for angel investors. Now, what you can do is, first of all, use this to make your list of investors. Second, you have all of their LinkedIn. So when you click on it, it's literally going to open up their LinkedIns. You can contact them there. Or as I said, even better, here this person will be a second degree connection. So we have people in common. And then the third thing is what we also build is a tool that basically automates this warm introductions. So it basically scans your network and it shows you who of your contacts can introduce you to investors and automatically reaches out to them. So that's for the second degree connection. Uh, there's um, there's a lot that can be done. And then yeah, and then the third thing is cold outreach. I mean, look, a couple of things with cold outreach. We run a lot of cold outreach campaigns. It used to be enough to just say something in the email, such as, "Hey, I saw that you did like a deal on XYZ last year. Congratulations." That doesn't work in 2026 anymore because AI is really good at drafting cold outreach emails. What I've actually seen that works really well is just being super direct and skipping the small talk. Or the opposite, doing a very personalized email. And I would almost say that I think we're soon entering a time where people will appreciate typos because they will know that it's going to be a human writing it. I'm not saying you should do that, but it's just like um, yeah, kind of an observation. And look, guys, I wanna stop it here because I know we have 5 minutes left, and I don't know exactly how much, yeah, how relevant the
Don't
question is, but
don't worry about the time, okay? Because if there's questions people want to ask, because I'm sitting in here today and I'm looking at a lot of people within our community, our founders community, who are either raising at the moment or looking to raise in the near future. So there could be quite a few good questions that are valuable to both sides here. Any additional questions for Guy this morning? Anything at all about fundraising, meeting investors, and something on that? I've always found when I speak to founders, the ones who get traction are the ones who meet potential investors in the flesh. Would you agree with that, Guy? You know, who attend networking events, go and meet people, and are able to explain and what they do and get all of the value across face to face as opposed to cold emails or cold outreach.
yeah, I would say it's a combination of both. So um, there's a lot of chances that you will find your investor actually like in the line to a, waiting for a drink at a networking event or and what you need to become really good at is when people ask you like, what do you do? Instead of saying like, oh, we do a SaaS company that is focused on healthcare, where we help consumers get, I don't know, accurate information on like the latest skincare products. Rather, don't do the pitch of the product, but again, do the pitch for the investor, which would be like, we're building a business around X, Y, and Z, which currently is in its growth phase with a 20%, projected growth over the next like 2 months. Wherefore we are currently hiring 3 new team members and looking for one more investor to join our latest round. That is way more attractive than doing the pitch about the product. And if you do it this way, then there's a high chance that whoever you talk to at events can convert to becoming an investor.
Thank you
But
very much.
would it be just, yeah, would it be just that? I mean, I would also pitch against my own product at this point, right? Because like I think that cold outreach can still work, but it's more of a secondary, right? Like a lot of founders that we help, they have already raised 30-50% of the round, and then they need to find more investors. And then on top of that, we'll do some cold outreach where then it's a numbers game, and then you need to reach out to like 300, 500 investors, out of which maybe you'll get like 10 calls, out of which 1 or 2 will convert, and then that's the funnel.
Do you see any change in M&A activity going forward in, say, the next year, 18 months?
I'm not sure. I'm not an expert in that field.
No. In terms of like, obviously, if M&A activity improves and increases, there's more exits for founders. It
That
will
would be.
hopefully reactivate the VCs and everything else. The chain. What do you feel the factors could be on that could influence the M&A market?
Yeah. Well, what could influence MMA is, for example, as I said, if this year, for example, we have more companies that IPO that actually eat there themselves than have the cash to acquire and to merge. Um, but I'm not exactly sure. That I would say that this is really kind of beyond my expertise. I don't have a thought on that.
Okay, that's
Um,
fine. That's fine. I
yeah.
just because some people I'm speaking to at the moment are saying, "Oh, the activities reduced because of all of the uncertainty in the world." But I know there are people who go out and buy in conditions like this because they can get a bargain or what they perceive to be a bargain. So it's interesting times, I feel.
Yeah, for sure. My
Patrick,
apologies, because I do need to jump in 2 minutes.
okay.
'Cause I was told it would only be half an hour, and I do have another meeting afterwards. But maybe we can, Patrick, if you wanna.
Yeah, thanks. Just quickly, on your platform, what would you say with your subscribers? What's the average time that they have to raise? What's the average ticket size? And the other is, what's the difference in your platform between prime and managed? We can also take this offline, not a problem,
Yeah,
to discuss that in more detail.
yeah. But very simply, average time for fundraising is 3 months.
Yeah.
It's 2.8. There is a 70% success rate in scheduling meetings and 60 in funding. So it doesn't always work, but it's like around 2/3. Then what was the other questions? Oh yeah, and
Difference
what's the
between
difference
prime and
between?
managed?
We have basically like two options. Like either you yourself create use our platform as a tool and you create the campaigns on it yourself. That's the prime plan. And managed means that like we manage the campaigns for you. So we have a team that's dedicated to setting everything up, writing the emails, doing the outreach, and then giving you it's kind of a hands-on like campaign management where your only job is then to respond to investors on LinkedIn or email that respond to you.
And is that when, if we took out that plan, does it accelerate the speed or just reduces the
Yeah,
time we spend on it?
both because it's accelerate. I think there's some stats on the website. I forgot to write now. I think it accelerates by 1.25 or something.
Okay.
Very simply because we reach out like we max out the amount of outreach we do, and then we use another tool also to do like LinkedIn outreach. Plus, I would say we're becoming pretty good at what type of message to write. But yeah,
Okay, awesome. Gail, I'll follow up.
let's be in
Are you
touch.
providing your details, or Ollie, you're introducing, or?
I
I'll
guess
introduce you and
Thanks, mate.
Guy on Monday. I'll do all the introductions.
sounds good.
Well, that's wonderful. Thank you very, very much. You're welcome back anytime. I'm
Thank
talking
you.
to Johan a lot, so yeah, it
Nice.
was very, very good. And we
Thank you.
have filmed this session this morning that we'll put in our database, and we'll do short clips and put it on LinkedIn. But very much appreciated, Guy, and have a great weekend.
Great.
Sounds good.
Thanks a
That
lot,
goes to
guys.
everyone
Thank you,
else.
guys. I wish you
That
all the
goes to
best.
everyone
Good
else.
weekend. Take care.
Thank you.
Bye-bye.
Bye-bye.
Bye.
Bye.